be required to keep at least 7% of deposits or 10% of deposits with the central bank. Therefore, any cash balance with the central bank, in a bank, this is an asset. To a bank, this is an asset. To a bank, any money you keep with a central bank, that is an asset. Number two, that is number one, peculiar item number one. Number two, we have deposit and placement with other banks. Deposits and placements with other banks, deposits and placements with other banks. Remember, a bank can also decide to keep some cash with another bank, You deposit cash to another bank. Therefore, this one is an asset to the bank. This is an asset. And remember, if you are depositing some cash with another bank, then that cash will accrue interest because that bank will be lending it out. Therefore, out of these deposits and placements with other banks, we have what we call interest income. We shall get interest income there. Apart from just being an asset, we shall also get what? Interest income. Then we have number three, another peculiar item. Number three that we can have is deposits and placements from another bank, deposits and placements from another bank. Now, this is where another bank is bringing cash to our bank to keep it there. Therefore, this one becomes a liability. And remember, because when we get this cash, as a bank, we are going to invest. We give out as cash, as loans. Therefore, it will have interest expense to the bank. Interest expense to the bank. We shall have interest what? Expense to the bank. Therefore, these are some peculiar items that we need to look at before we look at the financial statements of a bank. What are the cash balances with the central bank? An asset. Cash deposits and placements with other banks. This is an asset and it will earn interest because we are issuing our money, we're giving out our money. Therefore, we expect returns. Then deposits and placements from other banks. This is where other banks are coming to deposit in our bank, which means they will demand interest. Therefore, that is interest expense. Then number four, loans and advances. Now, loans and advances, these are loans that a bank is extending to customers. Loans that the bank is extending to customers. Therefore, to a bank, when it gives out loans, it becomes what? Assets. This one becomes asset. And remember, out of these loans, we shall get interest income. The bank will get interest income there. David, you are saying interest with central bank. That one will not give any interest. It is just a security. It's just a security for the deposits. Therefore, it does not earn interest with the central bank. But these others will earn interest. Then number five, another term, number five, customer deposits. Customer deposits, what the customer is bringing in the bank to keep there. Therefore, this is a liability to the bank, a liability. And remember, it will also accrue interest expense. It will accrue interest expense, that customer deposits. It's a liability because we take someone's money, we'll be required to pay. Then number six, government securities. Government securities, this is investment in government bonds. Government securities, that is investment in government bonds. Therefore, this one becomes asset. It becomes asset. And out of this, we earn interest income. We earn interest income out of the government securities. Then lastly, we have provision for loss allowance, number 7. Provision for loss allowance, provision for loss allowance, provision for loss allowance. Now, according to the changes in the standard, especially IFRS 9 financial instrument, every bank, once you give out a loan, you are required to provide for the loss allowance in terms of impairment and expected credit loss. In terms of impairment of the loan, once you give out a loan, you are required to compute a certain percentage of the loss. Therefore, we call it the loss allowance or impairment of this loan, impairment of the loan. According to IFRS 9, those are some changes that came in. The moment the bank gives you a loan, you are required to compute what? An impairment of that loan and expected credit loss. Those are some peculiar items that we shall be finding in a bank. Otherwise, the bank statement is just like any other financial statement. It's like any other financial statement. Let's look at a small format of the income statement of a bank. Then we do a question. Any questions so far? Any questions so far? Remember, we are rushing fast because of time. We want to finish this banks today so that on Saturday we embark on revision. On Saturday, we do theories and some revision. Therefore, if there's no question, we can look at the format of a financial statement, income statement of a bank, income statement of a bank. This is the easiest topic so far, easiest topic. Once you know what are the incomes and what are the expenses of a bank. Therefore, we say APC Limited, APC Bank or APC Bank, APC Bank, statement, income statement for the year ended, year ended 31st March 20XX, APC Bank, statement, income statement for the year ended 31st March 20XX. We have 2 columns of currency, shillings, you put 2 columns of currency. Then we start with interest income. Now, when we are preparing the income statement of a bank, definitely you begin with interest income, you underline. Out of this interest income, we have mentioned briefly where we get interest income, like for example, from loans and advances, we get their income. Placement, deposit and placement, deposits and placements, with other banks, we get income there. Also from government securities, government bonds, we get income there. Then we have other incomes, other interest incomes, we get it there. Then we get our total there. There we get income from loans and finances. That is where the bank gets income. Then we come to less expenses, less interest expenses, interest expense. We come to less interest expense. Where do we get this interest expense? From customer deposits, we pay interest in the first column there, customer deposits. Then deposits and placements from other banks, that is interest expense. Then we get total there. After we get that total, we get our gross interest, we have it there, gross interest. Then we come to add other incomes, non-interest income. We come to add non-interest income, non-interest income, that is normal operating income, like fees and commissions, foreign exchange gains, this is a normal operating incomes, foreign exchange gain, we have dividends, we have dividends there. Dividend income, you can say dividend income. Those are some of the incomes that we get. Then other incomes, other operating incomes. Then we come to add together with that one. We add together. I believe we are together. We add together there. Then we come to less, we get total income there, total income. Then we come to less expenses, less non-interest expenses, that is operating expenses. Non-interest expenses, that is the operating expenses, normal expenses. Like, for example, number one, we have staff costs, those salaries that you pay, staff cost. We come to less. Directors remuneration, directors remuneration. You less directors remuneration. We also come to less auditors fees. You less auditors fees. We less depreciation. We less there. We less also provision for loss allowance. Then we get profit before tax. Profit before tax. That is our profit before tax. Then we come to less taxation. We come to less taxation. We get profit after tax. Then we come to less dividend. Under dividend, we have interim dividend. Then we have proposed dividend. Then we get retained profit for the year. We get retained profit for the year. Then after we have the retained profit for the year, we come to add. We add retained profit brought forward, retained profit brought down. This one is from the previous year. Remember, these are continuing business. Therefore, in the previous year, we had a profit. Therefore, we come to add there what is the retained earnings from the previous year. We come to add it there. Then we get our retained. We get retained profit carried down. Retained profit carried down. Therefore, basically, that is the format of a bank. Bank income statement. And the balance sheet is just like any other normal balance sheet. A balance sheet is just like any other normal balance sheet. Therefore, once you know this format, then doing a bank question is very easy because all this information, you will probably get it in our question, save for only maybe one item that you will be required to compute, maybe provision for loss allowance, maybe provision for impairment, maybe. But all this information, examiner will give you directly what was the interest for income from loans and advances. However, there was a question I had posted, and I want us to look at that question to do the income statement quickly. There's like a small question I wanted us to look at because we say that. Let's look at that small question and see if we can do it. It's from section 3, 2018, May 2018, section 3, that is section 3. If you are there, you say yes. If you are there, you say yes so that we continue. Anyone who is there, maybe? Thank you very much. Ebena, you are there. You are there. Let's continue. Thank you very much. Vincent, thank you. Penina, thank you. Question four. We look at question 4. In the paper I posted question 4. It says the following information was extracted from the books of Maendeleo Bank, Commercial Bank, Limited, as at that 1st December 2017. We have number 1, that's a trial balance of Maendeleo Commercial Bank. When we talk of property, plant, and equipment, that is an asset. It will go to our balance sheet as an current asset. Intangible assets, that's an asset. Ordinary share capital, ordinary share of shillings 20 each, that is equity. Share premium, that is equity. Revaluation reserve, that is equity. Interest in statutory reserve, that is equity. Then interest income we have from loans and advances to customers, that is income. Finance lease, that is income. Deposit with other banks, that is income. Government bonds, that is income. Then interest expense we have on customer deposits, that is expense. On deposit with other banks, that is an expense. Then fees and commissions received, that is other incomes. Fees and commissions, other incomes. Then we have forex commission receivable, that is other incomes. Other operating incomes. Then fees and other expenses, those are expenses that will be other non-interest expense. Impairment of loans and advances, administrative costs, general operating expenses, income tax expense, retained revenue 1st January 2017, deposits with central bank, that is an asset. Deposit with central bank, that is an asset. Deposit due from other banks, that is a liability. When it is due from other banks, that is a liability. But if it is deposit to other banks, that is an asset. Like government bonds and other securities, that's an asset. Loans and advances to customers, that is an asset. We have other assets there. Then we have deferred tax asset. Then we continue. We have other investments, that is an asset. Deferred tax liabilities, then other liabilities, current tax liability, deposit from other banks, that is a liability. Deposit from other banks. Yes, we had deposit due from other banks. Then we have deposits from other banks. Then we have customer deposits. Those are liabilities. Additional information. Intangible assets were impaired by 20% as at the end of the year. We had intangible assets that were impaired. Therefore, we shall report impairment as non-interest expense, impairment loss. Then we have number 2. Property, plant, and equipment is to be revalued to 12,750. Therefore, when we check property, plant, and equipment, is 6750. We are to revalue it to 12,750. Therefore, there we shall report revaluation gain there, revaluation gain. But remember, in the balance sheet, we shall take 12,750 as our revaluation. Then an allowance for unserviced loans is to be created at 2% of the outstanding loans and advances to customers. Therefore, when you check loans and advances to customers, 396,810, if you can check in the trial balance, examiner is saying that we are to provide our an allowance of 2%. Therefore, that allowance becomes an expense. We report it as an expense there. A provision for loss allowance, we provide for it in the income statement. And when you are reporting in the balance sheet, once you have a loss allowance, you subtract from loans and advances. You subtract because thus will reduce the value of our loan. We reduce the value of our loan. Then we go to required. Income statement for the year ended at 1st December 2017. Then statement of financial position as at that 1st December 2017. Therefore, let's look at this income statement quickly. I believe we have read the question. We have seen what the examiner wants. Therefore, let's do it. Let's actualize it and see how you prepare the income statement for a bank, so that maybe on next Tuesday, if an examiner will make a mistake, not next Wednesday, if the examiner will make a mistake and bring this one, I'm sure we shall get a guarantee of that 12 marks. 12 marks will be ours. 12 marks will be ours if the examiner will make that mistake. Therefore, we have a bank called Maendeleo Commercial Bank. Maendeleo Commercial Bank. Maendeleo Commercial Bank. Commercial Bank. Maendeleo Commercial Bank. Income statement. Income statement for the year ended. For the year ended 31st. For the year ended 31st December 2017. That 1st December 2017. We have shillings, 2 columns, shillings. Shillings, shillings. Are we there? Are we there so that we continue? Maendeleo Commercial Bank. Yes, thank you very much. Thank you very much, Lawrence. Okay, let's begin with our interest income. Let's begin with our interest income. Interest income. Let's begin with interest income. Now, we just check in our trial balance. What is our interest income? Examiner has highlighted there our interest income, like loans, loan advances to customers, loan advances, advances to customers, loan advances to customers. We were given as 15,042, 15,042, 15,042, 15,042. Then we also have finance list, finance list. Although according to the changes in the standard, now we don't say finance list. Remember, we said you don't call it finance list, but we say to the part of the lessor, it's a finance list, but part of the lessee, it's the right of use asset and the lease liability. We don't have the finance list. Therefore, we have 14,040, 14,040 there, 14,040. Then deposit with other banks, deposit with other banks, Deposit with other banks, we have it there as, is it 3024? 3024. 3024. Then we have government bonds, government bonds. Government bonds. Government bonds, we have it as 7230. 7230. 7230. Then we are done with those ones. You give me total. You give me total. Kindly give me total. 15,042 plus 14,040 plus 3024 plus 7230. 7230 total. 39,336. Thank you very much. 39,336. Then we come to less interest expense. Less interest. Interest expense. Less interest expense. Interest expense we were given on customer deposits. On customer deposit. On customer deposits. You put in the second column here. Second column we were given as 7,500. 7,500. Then we have on deposit with other banks. On deposit with other banks. With other banks. Deposit with other banks. Is it 168? Is it 168 there? I'm seeing 168. Then total, you come to less it here. I think it is 76.68 if I'm not wrong. 76.68. 76.68. When you less, you get how much? 31,668. 31,668. Then we come to less to add non-interest income. Non-interest income. Non-interest income. We just check from the question what are non-interest income. Like we have fees and commission received. Fees and commission received. Fees and commission. Commission received. We have it as 5592. 5592. Then we have forex exchange. Forex exchange. Forex commission receivable. Forex commission receivable. Commission receivable. Forex commission receivable. It is 30 what? 330. 330. Then we have other operating incomes. Other operating incomes. Other operating incomes, we have it there as 45. 45. 45, I believe it's 45, yes. 45. Then you give me total income, total income. I'm not seeing any other income there because we are going directly to assets and expenses there. Therefore, you give me total income, 42,090. Thank you very much. 42,090. Then we come to less expenses. Less expenses, non-interest expenses. Non-interest expenses or operating expenses. And interest expenses, we come to less them there. Here we have fees and other expenses. Fees and other expenses. Fees and other expenses, we have them there as fees and other expenses. Is it 450? I believe it is 450. 450. Then we have impairment loss allowance, impairment of loans and advances, impairment of loans and advances, impairment of loans and advances, 25, 25, 92, 25, 20, 25, 20. Then we have administrative costs. Administrative costs. Administrative costs, we have them there as 11,580. 11,580. Then general operating expenses, general operating expenses. General operating expenses. General operating expenses is 9420. 9420. Then we have another one, we have income tax. That one will come after retained profits. We go to additional information. Examiner says that intangible assets were impaired by 20% as at the year end. Impairment of intangible asset, amortization of intangible asset. How much is our intangible assets? When you check in the balance sheet, in the trial balance, our intangible asset is 6450. 6450. Out of 6450, we impair by 20%. Therefore, you multiply by 20%. If I'm not wrong, 20%, multiply by 20%. How much is our impairment loss? Impairment loss, 1290, thank you very much. Therefore, that is impairment of intangibles, of intangible assets, 1290, less. Then also in additional information, we have a property plant that is a revaluation. Then an allowance for unserviced loans is to be created at 2% of the outstanding loans and advances to customers. Therefore, we have loans and advances to customers where we have 396 loans and advances. Therefore, loss allowance. We have the loss allowances. We get it from 396, 810 times 20 times 2%. How much do we get times 2%? 396, 810 times 2%. 7336.2. 73. That is loss allowance. Loss allowance 7336.6. 7336.6.2. Sorry, 7936. 7936.2. I believe we are through. I believe we are done. We are done with that one. I believe we are done. Then we come to get profit before tax. You get profit before tax. You less from our incomes, you get profit before tax. Before tax, get profit before tax there. Anyone else whose Mwalimu screen is not clear? Elizabeth Jerry, you are asking. Anyone else? Very okay. It's Ikosawa. Elizabeth, you can check on your network, maybe on your end. You check on your network. Therefore, our profit before tax in Ngapi. Profit before tax, so that we continue. 88, 93. 8893.8, 8893.8, 8893.8. Thank you very much. Then we come to less taxation. We less taxation. Examiner gave us tax expense of how much? Tax expense, income tax expense of 6,300. 6,300, we less 6,300. Income tax expense, then we get profit before tax, profit after tax. We get profit after tax there. $2593.8, 2593.8. Then we check if you are to pay dividend. If you are to pay dividend, examiner will give you an additional information. Therefore, it means we don't have that dividend. Therefore, we come to add retained earnings. Retained earnings brought down. But in some questions, examiner will tell you that you are going to pay dividend maybe of 5% of maybe per ordinary share or shillings 1 per ordinary share. Therefore, if you are to pay dividend, kindly you include. Therefore, retained earnings brought forward, we are given in the trial balance as 1st January 2017 as 49,920. 49,920. 49,920. Then we add there, we get retained earnings. Retained earnings carried down. Retained earnings carried down. 52,513. 52,513.2. 0.8. 513.8. Thank you very much. 0.8. That is the end of our income statement. Now, in a bank, what you are required to understand most, just know how to prepare the format, what are the interest incomes, what are the non-interest incomes, what are the interest expenses, what are non-interest expenses. Then you are done with the income statement. Otherwise, there's nothing to do under banking. That is the normal question. And in a bank, that is the usual question you will get. The usual question you will get. Now, let's do the balance sheet. Let's do the balance sheet of this bank. Let's do the balance sheet of this bank. Let's look at the balance sheet of this bank. Balance sheet of the bank. Quickly, let's look at the balance sheet of the bank. It is called Maendeleo Commercial Bank. Maendeleo Commercial Bank. Let's look at the balance sheet of our bank and see how we report the assets of our bank, assets and liabilities of our bank. Assets and liabilities of our bank. We say Maendeleo Commercial Bank, statement of financial position, statement of financial position as at 31st March, 31st December 2017, statement of financial position. You put currency there, shillings in millions. Currency, you include currency, shillings in millions. Then when you are preparing the balance sheet of a bank, you start with the most liquid assets, When you are preparing the balance sheet of a bank, you start with the most liquid, like deposit with central bank, like deposit from other banks, like loans and advances to customers, Therefore, those are the most liquid items that you begin with. Remember, in a bank, there is no current assets and non-current assets. We just generalize all the assets, but you begin with the most liquid one, the most liquid. You don't categorize that these are non-current assets, these are current assets. Therefore, like in this Maendeleo Bank, we start with deposit with central bank. That is the most liquid cash in the bank. The most liquid cash, deposit with central bank. Deposit with central bank. That is the most liquid. Deposit with central bank. How much is the deposit with central bank? That is 38,400. 38,400. 38,400. Then we come to, after that, we have deposit due from other banks. 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 Due from other banks, that is 57,600, 57,600. That is an asset, 57,600. You start with the most liquid ones, Then we go to loans and advances to customers. 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 We were given 396,810, 396,810, but we less 10%, 2% times 2%. We less 2% minus 2% of 396. That is the loss allowance. 396,810 from note number 3. Note number 3. The provision and allowance for unserviced loan is to be created at 2% of the outstanding loans and advances to customers. Therefore, when we are reporting these loans and advances, remember we have the loss allowance. We already computed the loss allowance. Bernard, you are saying due to other banks is a liability. Due to other banks is a liability. Yes, due to other banks. Gladys, you are saying, is that not a liability? Gladys, when the examiner is saying that due from other banks, it means due from other banks, we deposited. Therefore, we are to get it due from. But due to other banks, it means we, due to other banks, it means we gave out. Get it a clarification there. If it is due to other banks, it means we gave out some cash. Get that clarification. Due to other banks, we gave due to other banks, it means we received money from other banks. Therefore, we are to pay due to other banks. But due from other banks, this means that due from other banks, it means we need to receive from other banks. Remember, the only difficult language is due from and due to. When we say due from other banks, what do we mean? Due from other banks, we mean that we gave out, therefore we need to receive from that bank. But due to other banks, kindly get that clarification. Due to other banks, it means that we have someone's money, we need to give back. If it is due to other banks. Nana, you are saying repeat. Please. I'm saying when the examiner says due from other banks, this one becomes an asset, because it means we are to receive from another bank. we are to receive from another bank. If it is due from other bank, we are to receive from other bank. But if it is due to other bank, it means that we have someone's money, we need to pay to another bank, due to another bank. I have it, but it's not mine, it's to another person, I will pay. Therefore, that is a clarification there. Therefore, due from loans, deposit due from other banks, that is an asset, but due to other banks, that is a liability. I believe we are okay there. Therefore, what will be the loans and advances that that is remaining? Loans and advances. Quickly, loans and advances. How much are we going to report? We subtract 2%. That loss allowance. We have already computed the loss allowance. 388.73. 873.8. Then we have another asset is government bonds. Government bonds there. Government bonds, you check from the government bonds and other securities, that is 46 to 30. Then we have other assets. We have other assets there. Other assets, we have them as 2145. Then we have deferred tax. We have deferred tax asset. We have it as 180. Then we have PPE. Property, plant, and equipment. We have it there up there as 6750. But in note number 2, it was revalued to 12,750. Therefore, we report what is in revalued amount, which is 12,750. But remember, we shall report the valuation in the balance sheet. We report the revaluation, we report it in the balance sheet. Then we have which other asset there? We have other investments. Have we reported other investments? We have other investments. Other investments, we have it as 468. Then lastly, we come to intangible assets. Intangible assets, we also amortized. Therefore, we have 6450 minus amortization. 6450 minus, we had 1290, if I remember well, 1290. We subtract the amortization of 1290. Other investments, we have other investments there. Then we have other assets and other investments. We have both of them. How much? 5160. Thank you. 5160. Any other asset maybe you have left out? Kindly check. This is our own responsibility. Check in the balance sheet. Maybe we have forgotten something that is an asset. Kindly check for me. Anyone? If there is none, you give me total assets there. Total assets, if there is nothing, total assets. You give me total assets. If you see that there is nothing else, I believe we are okay. I believe we are okay. 551 806.8. 551 806.8. Thank you very much. Then we move on to capital and liabilities. Let's move to capital and liabilities. Capital and liabilities. Capital and liabilities. Capital and liabilities. Capital and liabilities, we have ordinary share capital, ordinary share capital, ordinary share capital. Our ordinary share capital is 36, sorry. Ordinary share capital, 15 to 55, 15 to 55, 15 to 55, ordinary share capital. Then we go to share premium. Share premium. Share premium. Share premium, we have it as, is it 270? 270. Then we go to revaluation reserve. Revaluation reserve. Revaluation reserve. Revaluation reserve, we have 1380. 1380. But remember, we also revalued the asset. We revalued PPE from, we revalued PPE in note number 2, that is 12,750. 12,750. From PPE in the balance sheet, PPE in the trial balance is 6750. 6750. How much is the difference so that we added there? Difference of revaluation 6,000. Therefore, we add that 6,000. We add 6,000. We get 7380. That's our revaluation, total revaluation. Then we have statutory reserves. Statutory reserves. Statutory reserves. Statutory reserves. We have statutory reserves as 5730. 5730. 5730. Then we come to any other reserve. We have retained earnings. Retained earnings is a reserve. Retained earnings. Retained earnings, we had it as 50 something. As 50 something retained earnings. We had it somewhere in our retained earnings account, from our income statement. $52,513, $52,513.8. Any other reserve, maybe we have forgotten, maybe any other reserve. I don't think if we have it. Therefore, total reserve there. Then we come to liabilities. We come to liabilities. We come to liabilities there. We come to liabilities. We come to liabilities. We come to liabilities. liabilities. That is, you are saying 81, 148, 81, 148, 81, 148.8. Thank you very much, 0.8. Thank you, 148.8. Then we go to liabilities, that is customer deposits, customer deposits, customer deposits, customer deposits. Customer deposits, we have customer deposits. We have 452,985, 452,985, 985, 452,985. Then we go to deposit from other banks, deposit from other banks, deposits from other banks, deposit from other banks, deposit from other banks. We have it there as 600, deposit from other banks, 600. Then we have what else? We have other liabilities. We have other liabilities. First, we have current tax liability. Current tax liability. Current tax liability 34, 35. 34, 35. Then we have other liabilities. Other liabilities. Other liabilities 3,300. Then we have deferred tax liability. Deferred tax liability. Deferred tax liability 4338. 4338, 4338. Then any other liability? Any other liability that maybe you are seeing? Any other liability? Any other liability? I'm not seeing any other liability. Any other liability? If maybe you are seeing any other liability, you let us know. But for me, I'm not seeing it. Therefore, you give me total capital and liabilities. And liabilities. Total capital and liabilities. Yes, 51,806, 51, 551, 806.8, 806.8. That is in a nutshell, a statement of a bank, a balance sheet and the income statement. Therefore, whenever we have a question on banking, just understand what are the incomes of a bank, what are the assets of a bank. And remember, we have clarified that if the examiner says that this is a deposit due from other banks, deposit due from other banks, then we have deposits due to other banks, There is a very big difference, due from other banks and due to other banks. When we say due from other banks, it means it's a receivable. Due from other banks, that is receivable. We are required to receive from other banks. But if it is due to other banks, it's a payable. It means we need to pay. Due to other banks, it means we need to do what? We need to pay. That is a clarification. Kindly don't confuse. Maybe in an exam you lose 1 or 2 marks because of due from and due to other banks. Therefore, just know that due from other banks that is receivable, due to other banks that is payable, that is receivable, that is payable, that is payable, that is payable. Now, that is all about banking. That is all about banking. There's nothing much to discuss about banking. And remember, what I just want to advise you is during this weekend, we need to have intensive revision this weekend. Therefore, what we need to do, if you can accept, we can have a class Sunday morning. If you can accept, Sunday morning, maybe from 7 before we go to church, from 7 to 9, maybe from 7 to 9. If you can accept that offer, you can have a class from 7 to 9. Then we have our usual class in the evening again from 4 to 6. Then on Saturday, we have our usual revision class from 2 to 4, if you can accept, so that we have at least an intensive revision during the weekend. Now see, like today, we have lost 1 hour. Last Tuesday, we did not meet. Therefore, if you can agree to that proposal, then we can meet Sunday in the morning, Sunday morning when we are fresh. We do some bit of revisions, and also in the afternoon now we look at the theory questions. If you can accept that, then also on Monday, we can do some bit of revision on Monday so that we conclude every bit of revision in what we have done. Remember, about computations, what is remaining ahead of us is only 3 items. That is theory on conceptual framework, and also sustainability report, and capital markets authority, the theories, small theories on capital markets authority, and IFRS for SME. Those are something we discuss in 5 minutes. Once you know what's an IFRS for SME, then what are the differences between IFRS for SME and full IFRS. That is IFRS for SME. When you check on our course outline, we are required to understand what is an IFRS for SME. Even you can Google IFRS for SME, you get what is the difference between IFRS for SME and full IFRS. And kindly, I will be posting a certain book today, I believe today. I will be posting a book. In that book, from page number 1, from page 1 up to page 20, up to page 20. It's not that too much, up to page 20, not that too much. You read about conceptual framework. And on the conceptual framework, I just want to guide you that in that book, you will be reading on the standard setting process. Just know the standard setting process. That is very important. That is what the examiner wants us to know, the standard setting process, and also what is the work of IFRIC. IFRIC is the standard setting, International Financial Reporting standard setting, that committee. Just know what the standard setting process, and also the work of IFRIC and IFRIC and International Accounting Standards Board. The work of IFRIC and the work of International Accounting Standards Board, ISB. And I'm saying I will send a book and I will guide you on where to read. Kindly, I'm guiding you. And also in that book, you read on something, I think on page 221, you read on IFRS for SME, IFRS for SME. That is, I'm just guiding you on what you need to understand. And also in that book, kindly, I'm guiding you on theory. You read on IFRS for SME. Then you read on integrated reporting. Although integrated reporting was our first topic that we did, integrated reporting. You need to understand what is an integrated report, under integrated reporting, and what are the elements of an integrated report. what are the objectives of integrated report. Although on Saturday, we are going to discuss in detail these theories, I will show you how to answer. If, for example, you are asked a question on integrated reporting, how to approach it. Therefore, that one we shall discuss it on Saturday. Then also we shall look at under corporate governance. You look at the directors report. You look at the directors and chairman's report. Directors and chairman's report. Directors and chairman's report in a company. What is the role of the director and chairman? Those are the few items sorry, that you are going to get from that book. IFRS for SME. Kindly just know what is the difference between IFRS for SME and full IFRS. Then also the standard setting process. That is what we are required to know according to CASNEP, standard setting process. Then we have IFRS for SME, integrated reporting, directors and chairman's report. We already did related parties. We did related parties. On Saturday, I will also come with sustainability report. Remember, this is just pure theory. We shall also have like one page writing on sustainability report. That we shall do it on Saturday. That is like 15 minutes. We are done with sustainability report. You are just required to know what is a sustainability report, what are the components of a sustainability report, and what are the benefits of a sustainability report. Those are the most set questions. What are the benefits? What are the, why should a company have a sustainability report in the company? Therefore, we shall know it on Saturday. And all this one you will read, standard setting process. That one you will see that's the process in that book that I will give you tonight. Then also you read on IFRS for SME. Otherwise, nothing much. What about financial statements in hyperinflationary economy, including the preparation of financial statements? And that one is also a new area. Maybe we shall look at briefly on Monday. It's not a big area, just a brief one, how to adjust the financial statements. We shall look at it on Monday, probably on Monday, because it's just how to adjust a statement under under inflationary economy, how to adjust the financial statement. Remember previously it was just to know what's an inflationary economy, how does it affect the reporting, but now you are required to adjust those financial statements. It is something you take like 10 minutes to show you how you adjust. It's like doing an analysis of financial statements. Income taxes, that one we did, income taxes, Esther Kidau, but if we shall have time during this weekend, we can revisit income taxes, deferred